I wanted to show y'all something I got. So I did this Secret Santa thing. I got all kinds of like weird shit, like that were funny. But here's something that came with it too. It's 2 ounces of copper. Okay, so it's not like valuable, but it's copper poured in the BTC. Pretty cool. That was a like a Secret Santa gift. Didn't expect it at all. Oh, we'll take it. All right. So we're backing this truck up. Let's start this conversation. High time frame. What are we looking at? What is going on? What is Bitcoin doing? Looking at weekly candles. So every candle on here. I know I had a big influx of new followers, and I think it had a lot to do with some really flattering Twitter posts that were going on. So first off, if you were a part of that, thank you, and welcome. If you're a new follower, come on in. Bitcoin in the early days was less than a penny, all the way to new all-time highs just a couple months ago of 69,000 and change. Okay, so this is you gotta understand the big picture if you're gonna understand the low time frame picture. Well, high time frame, Bitcoin is made up of these boom and bust cycles. Boom, bust, up, down, up, down. The way I view it, my most preferred way of viewing these markets is a period of bull, period of bear, and a period of sideways. Bull, bear, sideways, bull, bear, sideways, bull, bear, sideways, bull. So it is my opinion we're in the bear part. Bear and sideways, right? So bear, sideways. That can come about a number of different ways. This is where it kind of leads us into the conversation right now. So high time frame, this is my view of this market. All right. The market is merely ranging, in my opinion, highs, lows. And it is my opinion that we are headed down to the lows. So to the guy who asked earlier, hey, where are we going? 20s, 25s, 18s, 7s, whatever. The answer to that question is, it is my opinion that we are at minimum traveling to these lows. Let's get rid of these just because I don't want to distract from what I'm saying here. At minimum, a visit to these lows, these range lows, and then bonus points beyond that, in my opinion. Bonus points, a break below, stopping out everybody. So this is just normal market activity. This is what the whales love to do. Find a point where a huge number of people are betting that, are like going in a certain direction. It could be up, it could be down. In this case, these guys in here would be a perfect target. So if I could run the price, if I had the capital to sell all the way off before I went to the moon, like before I sent it to 100K, I would stop every one of these guys out and then send it. So this is my perfect scenario. If I could script my own scenario, this is what it would look like. A break of any of these lows. So what would that look like? Maybe 25, maybe 27, 28, anything like that. To me, followed by a revisit into the range. So these are like the two key criteria is, for me, a break below and then a reclaim. Womp, womp. If I see something like that, I am hella bullish. I am like macro, big time bullish. Like looking for 100 to 200,000. Do I think this will play out very quickly? No. I think that this will take time because all great movements, number one, tend to take place around the halving. Okay, and we are not near the halving right now. So here's a really good view for a perspective of where we are with relationship to the halving. A couple things worth noting on this picture right here, this screen. These are the halvings. See these vertical lines, these white lines? Every one of these points, sorry, these are line charts if you're not familiar. They're like, what is that? It's just another way of viewing the market. Whatever, I'll put on candles. Halving, bull market. Halving, bull market. Halving, bull market. You see, it's very clear to see. Anyone with half a brain can see that. Halving equals bull market. Halving is here. So a couple things you may not recognize, or you may not think much about is two other things. Where are the tops in relationship to the halvings? Would you know that from the halving in 2012 to the peak following it was about 365 days. It was almost a year. Right? Well, what was this one? About 500 days. Okay, interesting. So this is from halving to peak. Then halving to first peak was 360 or so. Second peak was what? 540, almost exactly. So this could be completely coincidental, but this time period from that halving to the high was identical from that halving to that high. Very interesting to me. The other thing that is interesting, so that's the part one. Part two here is, if you go backwards in time, if I say, so from this halving, what was the lowest point of the bear market? It was about 540 days before the halving. All right, well, what about this halving right here? It was about 525, 530 days prior to the halving. So that's two data sets. And what is this one? I don't even know what this one is. 400 or so. Okay. But the last two were 540 days from the low leading up to the halving. But why do we care? Why am I talking about this? Because when we look at where that point is within this data, that's what this orange vertical line is. Okay. So this orange vertical line right here, because we have a projected halving date of somewhere in the kind of the March 2024 area. So if this cycle is going to, this is the big if this cycle is going to behave like it has the last two, okay, then we would actually be looking for a bear market low somewhere in late quarter 3 or early quarter 4 of this year. So this is why I'm talking about this stuff, because this is what people think of me. Okay, like in general, you just kind of the average Tom, Dick, or Harry. This right here, this is what they think. They don't realize that, like, I'm literally trying to help people and been able to see two of these tops form and save, you know, from 40 to 50% drawdowns, anybody who would listen. That's kind of like thrown out the window. They're like, oh, you just don't want it to go up. That's not what I'm saying. What I'm saying is the market's going to do what it's going to do. And if I can interpret that data and then trade accordingly, then I win. Like, that's it. I don't care what it does. I'm very neutral with this stuff. So if the market is going down now, and if we know from a high time frame that we have these bull, bear, sideways, if we're likely heading into some kind of bear moment, okay, and if we also know separately that, like, through some time analysis, we only have about, like, from today to that point, 245 days roughly, okay, give or take a week or two in there, maybe a month. We are less than a year away from the potential lowest point that we will see Bitcoin for the next 4 years. Like, process that. Okay, does that sound like something that like a perma bear would say? Because I don't think it is. Because what I'm trying to say is, if this plays out, if I'm right, then, like, you should be setting your chips, getting ready, and you will have one moment to deploy where it is the lowest for the full cycle, for the next bear and bull cycle. This is your lowest, most opportune moment to buy in. And I think that moment will be coordinated with a break of this range low and then coming back. That's what I think. I'm not trying to be perma bull jack, perma bear jack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.